All righty. Hey, welcome to the last July Hurley Investments Market View commentary. Today is the 28th. I appreciate you guys letting me get this recorded today. We have kids running off to college that have to report in Oregon on the 31st and the 1st. So we're busy after coming home from vacation. I do apologize. I'm not doing this live, but we are going to do next week's live, and next week's will most likely be a recorded webinar on is the stock market gambling. So I'm going to do a little bit different next week, just as a heads up. But I appreciate you guys letting me do this just as a recording. Again, if you do have any questions, K Hurley at Hurley Investments, zip them my way. All right, this week, we have three things this week. This week involves FOMC meeting on Wednesday. It involves big tech earnings, and it also involves important economic reports. Now, I could put a fourth one and a distant fourth. Let's see, that seems a little small. See if that can't be any bigger. It's 14. A distant fourth in importance is going to be trade deals. As we saw today, the market couldn't hold its gains on the trade deal, even though it's the big EU, the second largest trading partner that we have is a combined group. And our market could not hold those gains on the S&P 500 or on the NASDAQ. The S&P was only up 0.02. Pre-market was up like 0.41. And the NASDAQ was only up 0.33. Pre-market was up as much that I saw 0.58. So there were some big gains to have opportunities for, but let's face it, it just wasn't happening. The big deals, even though they're our second largest trading partner, the EU is a group or a combined group, it just didn't hold water. In fact, pretty interesting. I'm going to stick the EU here. They still have a 15% tariff rate on, I guess I should say, on non-excluded items. So what that means is they sat down and said, hey, 15%, and we pick and chose a couple categories where there's not going to be tariffs on those items. Yes, that means we'll still have tariffs probably going into them. And yes, they'll have tariffs going into us, but it'll be much more equitable. The beauty about reciprocating tariffs is that for all intents and purposes, they have done this to themselves. This is not us slapping new tariffs on them. This is us using their tariff rates for certain areas and applying the same tariffs to them. So it's interesting because obviously they've called it a trade war. I'm hoping, well, I'll be honest with you, when I first started this, I thought, hey, how neat would it be to use the tariffs to offset our taxes, our income tax? Because that's where Trump is trying to go with it. More importantly, though, it will most likely, okay, what if we can use the tariffs to help lower the national debt? If we could take in an extra $1 trillion, and again, here's the big if, right? If we could have a balanced budget, I can't tell you the last, well, I can tell you. The last time that happened was with Bill Clinton, and to his credit, he balanced the budget by taking money away from our Social Security to pay off the deficit difference. So not sure if that's really a balanced budget, but the numbers will show that. Borrowed from Peter to pay Paul. With that said, pretty important that this one gets done. And the next one that's in line is China. They met with China for 5 hours today. I don't know if you remember, on August 9th, we had the big raise. Taco trade. Trump always chickens out. If it's a leverage for him to get things done, let's use it. But don't be surprised if at the end of this week we see some kind of trade extension where China will have another 30 or 90 days. As it appears, they are actively working on some kind of trade agreement. Okay, Wednesday, FOMC rate decision. And I would bet the house that rates stay the same. They could cut. They should cut. They're already behind the 8 ball. But for our purposes, and maybe Trump's going to learn, there's some people you can piss off and bully around. You don't bully around the FOMC. And stupid, shouldn't have done it. They could cut rates, but really, first rate cut this year will be in September. And it might be 50 basis points or 0.5%. So it'll be interesting to see. I would not, I'd like to say this would be a no-brainer. Nothing's going to come of this, but it could. It really, the way things are getting, well, the way Trump is attacking a sovereign entity in the government, not smart. It is someone that they can't bully around. Yes, I'm in complete belief, and I can put that in here. Yes, the Federal Open Market Committee is way late on cutting rates. No increase in tariff. I'm going to call them taxes that people call them. No huge job loss. And basically, they are paralyzed by over analysis. Paralysis by analysis is here. I do understand that the theory of higher tariffs are a tax to people. Every economist will tell you that, even though half of what they say don't make a whole lot of sense. But we do know that for all intents and purposes, yeah, there's a lot that has to be done. There's a lot that has to be done by way of making some of the trade deals fair and equitable. Excuse me. And tariffs seem to be the way to do it right now. And to be honest with you, we haven't seen the huge rush in inflation like all these economists have talked about. So it might be a great idea that in theory, if you raise the taxes, those are passed on to you. Supply and demand will show you that others will come in and take those people's places, or that they will find a leaner, meaner way to basically cover those costs. Some of technology is They're letting go of people that they don't need. Credit to Elon Musk, where he went into, I guess it's X, but what was it before? He went into social media, cut 80% of the workforce, and it's still functioning just perfectly. So pretty interesting that that you have that ability, and that the answer is not always cut and dry. So that's something to remember. The answer is not 100% cut and dry. It's not well, in theory, a lot of things are supposed to happen, but they don't happen. So expect no tax increase. If Trump would play a little bit nicer, I bet you would have seen the rates come down by now. That's where he blew it. Poor choice, poor choice, poor choice. Big tech earnings. This week, we have, well, actually, we just got a big group. I guess we'd call them bellwethers, right? UPS on Tuesday, Visa on Tuesday, Microsoft on Wednesday, Qualcomm on Wednesday, Western Digital on Wednesday, MGM Grand on Wednesday, eBay on Wednesday, Meta on Wednesday. A lot of the Mag 7 are this week. On Thursday, Amazon, Apple, Roku, Clorox, Bristol Myers. Friday, Chevron, ExxonMobil. We have a lot of big names or bellwether stocks for earnings. So in a way, earnings and the bellwether stocks are reporting every day this week. Every day except maybe today. And I'll go through what's reporting today with you here in just a little bit. Last but not least, big economic reports. And instead of listing them off, let's just go down to where I have them. Oops, I didn't finish. So I guess let me go back to earnings. Earnings on Thursday, Budweiser, Bristol Myers, as I said, is there. International Paper, MasterCard, Shake Shack, Sirius Radio reports, Beazer Homes reports, Clorox reports, Roku reports, then the big ones, Amazon, Apple, and MicroStrategies. I guess that's not necessarily a big one, right? CVX on Friday, which is Chevron, ExxonMobil, Floor reports, Granger Worldwide reports, KMR reports, and actually that's Kimberly Moore, that's KRB, Kimberly Clark, and T. Rowe Price. As the other ones you can see, Wednesday I listed some of those big ones. But economic reports, we have consumer confidence on Tuesday will be the big one. FHA housing price and Case-Shiller are probably not important, but JOLTS will be criticized or looked at. Wednesday, ADP employment. Again, ADP has been so far off, it's no longer even looked at as a reputable, anything reputable by way of the job numbers. It's so far off with the different counting that they're using that it's no longer important. But yeah, the GDP should come in positive at 2.5, pending home sales, FOMC rate decision. So for Mountain Standard Time, it's at 2 o'clock, 12 o'clock. It's 2 o'clock Eastern Standard Time. We're going to get our rate decision. It's expected to be nothing, no rate cut, but maybe they might give a little bit of spark that they're looking at a rate cut in the near future. Near future meaning that would be in the September meeting. All righty. Thursday, PCE prices. Personal income, personal spending, those will be looked at very much so. And then the average work week numbers of the non-farm payroll, private payroll, unemployment rates, ISM manufacturing, construction spending, Michigan sentiment. I don't know what all that other stuff is. You figure I would get that taken care of, but that's what we have coming up for economic reports. So it's basically employment, but more importantly, GDP on Wednesday with an FOMC rate decision, PCE prices with personal income, personal spending on Thursday, non-farm payrolls, private payrolls, unemployment rate, Michigan sentiment on Friday. So we have a lot coming on this week by way of news. All right. I did not see the new briefing picture. Let's take a quick check and just see if it's come out. Nope. So briefing is the same as last week. Really goes through the FOMC. We've already gone over it. We are still bullish on the Dow Jones, but moving more sideways, slightly higher than where we started the month. I think my 2% for the month is a pretty good guesstimate for the Dow Jones Industrial Average. S&P 500, we are overbought, and the S&P 500 does not stay overbought for long. Even with great earnings and tech coming up that's also in the S&P as well as the NASDAQ, I would expect to see a little bit of a sell-off, which comes to a point that I didn't mention, but I better mention here. We are protected. And I'm going to say mostly protected for earnings, can't spell, earnings and FOMC rate decision. We're going to have protection on through the end of the week. A couple that we don't have protection on is right now Bank of America. And Bank of America had great earnings. It's going higher. We do have a somewhat line in the sand for Bank of America, and that line in the sand is closer to $47.75. Let's take a quick peek at a chart so you can see what we're looking at. Bank of America. We're just looking at it doesn't really show it very well. Let's see if I can get this out a little bit wider. Color scheme, chart size custom. Yeah, it doesn't help us out very much. Basically, what we're looking at is the gap right here. And that's our 47.75. So that's our line in the sand for getting protection on Bank of America. We have protection on Apple at 210. Boeing that reports, pretty sure they report this week sometime, but Boeing has 230 protection. Chubb has 275. We do not have protection on Disney. And our line in the sand for Disney is 120. It seems to be holding that, but we're getting very close. So I don't know if we're willing to protect it so far before their earnings, but 120 is our line in the sand on Disney. If it falls below 120, we're going to get protection on for earnings, which comes I believe like the 6th. Well, we could look right in front of us. We could look at Disney earnings on the 6th. So Disney line in the sand is 120. And what else do we have here? Google L. Line in the sand is 190. Where we had puts before earnings. Oh, Micron. What a bugger this one's come to. Line in the sand is 110. And we did have puts at 125. We had puts at 118. We've been watching Micron pretty closely, but it's broken the 112.23 50-day. And we almost just added protection on today because of that. But we're now on the 4th day of it breaking it, and it's hanging right around it, which means most likely we have the opportunity to buy more shares of stock, or someone has a quantity of shares to buy around that 110. Today the low is 109.86. If you notice the last 4 or 5 days, it's gotten down to 109.98, 109.84. I think it hit 109.60 one day and bounced higher. So somewhere there is a buying opportunity or some shares that are being bought at the 110. So that 110 is our line in the sand, and we're probably going to let it close below 110, and then we'll add protection the next day if it doesn't bounce higher. All right. All right. NVIDIA, line in the sand is 175. Excuse me, 170. It's trading up at 175. And our Verizon line in the sand again is $40. Verizon had pretty good earnings. Anyway, back to the S&P 500. We're watching it. We are expecting, and we will probably have puts in place through Friday or not, or through this whole week till new money comes in for August. And then obviously the NASDAQ is a repeat of the S&P for the same reason, slightly overbought. We would expect, for all intents and purposes, we would expect to see a little bit of a pullback in July, and then again, we're going to really protect through August, September, and October, especially September and October, because those are the worst month and third worst month in the S&P 500. All right, I'm still sticking with my 2% July growth. I seem to be pretty close to that. How am I looking to trade? Protecting for earnings. We do have some good bull puts in place. Palantir, Micron. We do expect here pretty quickly to take off the short side of the 135-200 Micron short calls that go out to December. And yes, we also did take some profits off of NVIDIA. We had 135s, took some nice profits on those 135 long calls that were bull calls that we took $7.22 of credit off. So basically that was like a 250% return on the stock replacement bull calls. And then we put new ones in. I think we did 170 200s. So we're still following NVIDIA up to 200, but we're doing it more cautiously with a bull call, a short call, or credit at that 200 mark. All righty, going on. A couple interesting. Google stocks climb after Q2 earnings beat. I really thought they would be up at 200. but they haven't. They've just kind of stayed right about where they were at after their pre-earnings run. If you want to study Google and why we're bullish on Google, this is a great article that does a good job of explaining their numbers. And they knocked it out of the park. They did phenomenal at their earnings. Google is one of our favorites coming up here. Disney has earnings on the 6th. We've got two back-to-back articles here on Disney, how they're going to spend more money on their theme parks, and then how they're doing on their box office. Remember, their cash cow is their box office numbers. They're doing excellent. In fact, they should again have $3 billion billion-dollar movies. Lilo and Stitch was the first one for 2025. Fantastic Four will probably be the second one. And I'm forgetting they've got one more coming towards the end of the year that should be their third billion-dollar movie again. If it costs them $300 million to make and they make $700 million of profit on it, pretty darn good. That's a pretty good cash cow for that company. All right, here we go. JP Morgan says fintech middlemen like Plaid are massively taxing its system with unnecessary pings. I've used Plaid in the past, but watch Plaid starting to charge its customers a fee as we're not reading the fine print, and Plaid is using some of our information to send offers our way by advertising, by pinging the system for our to find out more information about us would be the best way to say it. Very interesting article. Please read through it. Again, I've used Plaid a bunch of times to verify my banking, and I did so without reading the fine print. Morgan Stanley, Wilson, S&P now likely to reach 7,200 next year. That would be that would be almost 4 years in a row with 20% gain. Talk about being stretched. Pretty interesting. If we keep getting the growth that we're looking at, if we now have these trade agreements that force and for all intents and purposes other countries to buy our goods, we look really good. So could we reach 7,200 next year? Definitely. I mean, it's not, yes, it is almost another 20% run to the upside, but not really. It's easier than that. In fact, it's not that much. We do have that opportunity, especially if we close closer to 6,500 this year. We're looking at another 10% gain next year. A lot of you asked about Intel. I told you stay away from Intel beat, and they still went down. Intel is in shambles right now. Their CEO, no more blank checks. It's pretty interesting because they were trying to do the best they can to cut costs. A very interesting article, but do not buy into Intel right now. That ship has not been righted. Yes, it's ridiculously undervalued. Yes, they're cheap, but why would you buy something cheap to hold on to it for the next 2 years and still see it possibly lose half its value, go down to like $10 or $9 a share? It just doesn't make sense. Great article on the EU Trump deal with 15% tariffs. If you haven't been reading up on it, here's a great article for you to read up on. And also, I found it interesting. This article basically razzes Tesla, who dumped 75% of the Bitcoin at one of the worst times, losing out on billions. What it's not telling you, it still made a profit. So here's the interesting part. Yes, they could have billions more if they held on to it. But obviously Tesla needed the money. They sold it at a profit. Could you have made more? Woulda, shoulda, coulda. Of course you could have. But you never knock a profit. A profit's a profit, a profit. You don't get broke from not taking profits. The article has a negative connotation that they did something wrong. Not true. Not true at all. If you're still making a profit, you're okay. Could you have made more? Possibly. But again, if that's the way you're looking, boy, that's really amateur trading. If you're booking a profit, you're in great shape. Last but not least, BTIG gave a warning on the NASDAQ that things are not looking good. It's been so profitable for so long. It obviously has to have a pullback. I disagree with the article, but the numbers are correct. So that just means, in all intents and purposes, when you get that pullback in the NASDAQ, please make sure that you're going to be protected. Yes, we're going to be extremely protective going into September and October. It would not surprise me if we go back to that 6,200 level, or if I can bring the chart up again. It's just our crappy time period. I would not surprise me to actually see us go back to possibly that 6,000, but I was looking at more 6,200. We could lose 5 to 10% of the value of the stock market. We'll gain it all back by the end of the year. So, agreed. We are stretched right now. So, we will plan on being protective and very protective into our August, but September, October particularly. All right, guys. Hey, I appreciate you being with me here today. I'm going to get this out to you guys in the next half hour. Any questions, again, don't hesitate to zip them to me via email. I appreciate all you guys and look forward to seeing you next week. Next week will most likely be a special commentary I'm trying to put together. Is the stock market gambling? Appreciate you guys. See you next week. Have a good one. Bye-bye.